Welcome everyone to this week's community call. We hold these calls every other Tuesday at 9 a.m. Eastern, 1 p.m. UTC. And this week we have several updates from different teams to go over, but on the agenda for the call today, we'll talk a little bit about the newest DAO Dune dashboard. The covers dashboard is live. That was launched on Friday. We'll talk a little bit about that. I'll highlight some RFCs that are currently on the forum about deprecating custody cover and yield token cover. We'll hear an update from the investment committee from Ray. Some other updates that we'll share. I'll share an update from the DAO Community Team. We'll hear the weekly update from the foundation from Hugh. And then Sam will go over the last week in review of cover sales, active coverage by cover type, a summary of the current governance discussions on the forum. And then it will be an open forum on the call for anybody that has any comments or any questions about things that we haven't covered. So I will jump right into things and talk about the newest DAO Dune dashboard. So for anybody who's not aware, the R&D and marketing teams have been working on a variety of Dune dashboards that track key analytics and metrics for the mutual. They have launched the claims dashboard, the capital pool and ownership dashboard, and then the newest one that they've launched is the covers dashboard. Now this is really great. There's a lot of great breakdowns. You can find active coverage on there, but even more, you can see how much cover has been underwritten since the mutual launched in 2019. It goes over the total cover fees earned, and there's a breakdown by asset. So for total cover underwritten, you can see the value that's been underwritten in ETH and DAI. For the total cover fees earned, you can see the breakdown between DAI, ETH, and NXM. For active cover, you can see the current active cover and a breakdown of what the cover is denominated in, either ETH or DAI. And you can actually see the historical active cover amount since the mutual launched in 2019 as well. There's a great breakdown by cover product, by staking pools, which staking pools are underwriting, which covers. You can see a breakdown by individual cover products. And then, of course, there's lists of the full list of covers in V2 and V1 that you can search in there as well. So there's a lot of great info here. And this is, I think, one of the dashboards that I was looking forward to the most. It's really great. There's still a couple things that are being touched up on here, but otherwise this dashboard is a great resource for anybody who wants to look at cover details or any cover analytics or metrics in detail. The next dashboard that the DAO teams are going to be working on is the staking dashboard. So that'll have a lot of detail around staking, what staking pools are staking against, and some more analytics there. So really great to see the DAO team shipping these Dune dashboards. And if you want to look at any of these, you can find that in the thread for today's call. And you can find the main Nexus Mutual page in the thread for today's call as well. I'll move on and talk about some of the RFCs on the forum. There's a couple requests for comments on the forum. And the first one I'll talk about is the RFC asking members for their thoughts on deprecating custody cover. So custody cover was first launched in December of 2020. The aim of this product was to protect people against risks from some of the custodial offerings. So if somebody has assets on a custodian and they're storing them there to trade, or if they're using a yield product in a custodian, if the custodian suffers a wallet hack, or if withdrawals are halted for more than 90 days, people are covered. So since this was launched, we've underwritten quite a bit of cover, so $220.5 million in cover, but we've also paid out over $6 million in claims for this product. And one of the issues we've run into is that there is a lack of transparency that custodians offer. So it is hard to assess risk, and then there's a much higher degree of correlation than was previously anticipated when this product was first launched. After the Three Arrows bankruptcy, after Terra kind of imploded, there was a lot of exposure across some of these custodians that were offering yield products. And we kind of saw that unwind throughout the year of 2022 after those two major events happened. So it's very hard to assess these risks. And because there's a high degree of correlation, this is something that, in my opinion, is while it's a good product, it does leave members exposed to too much risk. For context, the amount of cover that's been underwritten for custody cover is about 5% of all cover that's been sold. The cover fees earned are about a little more than 6% of all cover fees earned. And the claims paid are almost 34% of all the total claims paid so far. So this is one where it's been fairly costly. And we've paid out more in claims than we've brought in cover fees. So there's a lot of detail and there's a more comprehensive breakdown on the forum, but I would really love to hear members' thoughts on whether or not we should keep this product going forward. I've put up a proposal to deprecate custody cover so that this wouldn't be offered, and I have some of the specifications on that on the forum as well. And then a little detail about the RFC for yield token cover. So this one specifically, we haven't paid out any claims, but we haven't seen a lot of adoption here. This is a more sophisticated or complex product, and it's been kind of difficult to adequately explain this and make it accessible for the average person. And so because of that lack of adoption, we haven't seen a tremendous amount of cover sales since this was launched in the summer of 2021. And cover fees, while they've been a net positive for the mutual, have been relatively low. And with this one, this is going to be replaced by covered vaults. And for those who aren't familiar with covered vaults, this is a embedded product that would allow people to deposit into an ERC 4626 vault and have covered by default. So imagine a urine vault that is a covered vault. So you deposit into that urine vault, and the yield that is generated, a portion of that yield is used to pay the cover fee for the entire vault. So you don't have to buy cover, you just deposit in a vault and your deposit is natively covered. If there's a claim, then the claim would be paid out to the vault, and then the end user doesn't really have to do anything. So it makes it a lot easier to use, a lot easier to understand, and that product is going to be a more sophisticated version of this that's just more accessible for users. So because the adoption for this has been limited due to the complex nature of the product, I think that now might be a good time to deprecate yield token cover and just wait until covered vaults launch, which would be a lot more user-friendly. So I recommend you check out both of these on the forum. Both of these are really important discussions that it would be really great to get members' feedback on. And you can find both of those threads on the forum and also in the thread for today's call as well. So I'm going to turn things over to Ray, who will give an update from the DAO Investment Committee. Ray?
Hello. Yeah, I just wanted to provide an overview of the kind of stuff that we've been working on. So we've been doing a bunch of stuff to revamp the forum, and as part of that, we thought we'd put all the stuff around the investment committee in one place. So this place in the forum, basically, it's under, I think it's just the category is called investments, and it's a dedicated place to have discussions about the capital pool and any investment proposals and discussions that we want to have around that. I think it'll be easier for both members in general and members who are part of the investment committee to see all those conversations in one place, and hopefully it'll mean a bit more kind of clarity on what isn't a clear proposal. I also put up a template for making new investments. So this kind of gives a breakdown of the different things that someone should be considering, and the components of a fully fledged proposal for putting the capital pool into an asset of some sort or an investment of some sort, covering kind of rationale, available competitors, rewards, fees, and the risks of an investment, and how it fits into the investment philosophy, which I'll touch on in a second. There's also a short post just outlining what the investment committee does and who's part of it, and kind of how we fit into the decision-making process. So check that out if you want to. I guess from a bit of an update on, I guess what we've been doing, it's a lot of the work has been around investigating different opportunities, but I think we've really narrowed our focus on various ETH staking opportunities. There's a discussion about investing in Rocket Pool at the moment, and we've also been in conversations with Stakewise, and are feeling very positive about those two. I think generally members express their preference for being overweight ETH currently, and given the amount of assets in the capital pool, that very much makes sense, because I think the mutual as a whole and the ecosystem as a whole is very positive about ETH in the long term. So we've been investigating previously a lot of USD linked investments, especially things like on-chain government bonds that are yielding as much as 4 or 5% at the moment. But because of members' preference to be exposed to ETH, we are mostly focusing on ETH staking opportunities and other ETH denominated opportunities. And finally, we had just posted a new version of the investment philosophy. It's not much changed from the one that was posted at the start of 2022. Basically, we just updated the base currency, not to just be ETH or DAI, which we treat as cash on the mutual's balance sheet. As I mentioned, there's currently a preference for being overexposed to ETH, but we've kind of left the door open to some more currency diversification if the other side of the balance sheet, so the cover exposure that we have, requires that. We consolidated and clarified some of the risk categories. So this was sometimes in the previous version of the philosophy, I think some of the risks were kind of duplicated when you categorize things between low risk, medium risk, and high risk, and some were just kind of flat out lines that we won't cross. So we've simplified that. So for example, there's no more hard limit on what percentage of the capital pool is exposed to a single investment, but we just have some thresholds where if we go above 20%, then it's considered to be a higher risk investment. So that kind of thing where we solved some of the internal contradictions in the document. We moved a bit towards a bit of cash and lower risk investments. I think because of the current market conditions, we've adopted a bit more of a cautious note, but at the same time, it doesn't seem like the high risk investments have very good yields anymore in general, especially when denominated in ETH. So we've updated our weightings to be in line with the focus on ETH staking. So I think we're expecting something like 20% of the mutual's assets to be kind of cash in hand, so that we can pay claims in big events. And I think about half of the mutual is targeted to be in low risk investments like ETH staking. We've also updated the target returns in line with that, and also updated them for changing market conditions. I think as we move away from, the original investment philosophy was written at a time when you could get around 5% on ETH and around 15% on USDC. And that is just no longer the case in the market. And as we've also moved away from from the US dollar denominated investments and targeting those. We've moved the targets closer to those of staked ETH. Finally, a big change was maybe a kind of lesson learned from Maple was that we should be specifying monitoring actions at the proposal stage, and making sure that any proposal that has for investing the capital pool also has very clear touch points and kind of monitoring process in place to determine when the asset is beginning to look stressed or not performing to its full capacity, and there is a risk of losing funds. So we've added that requirement to the investment philosophy. I think that's pretty much it for me. So back over to you, Lee.
All right. Thanks, Ray. That's a great update. A lot happening on the investment committee side. I'll give a brief update from the DAO Community Team. So I've talked a little bit about this in the last couple of weeks, but just a couple of things that we are working on among some other projects. So two big things. One is the forum overhaul project. As Ray touched on, I've been going through and kind of recategorizing things on the forum. I've been making some new categories, and overall the idea is to make it easier to use the forum to find certain information so it's classified correctly, and just make the experience of using the forum a lot easier for members, so that it's a place where people can come and treat it like a town hall where anything related to the mutual can be discussed on the forum, and that's kind of at the heart of discussions about the mutual that are more long form or complex in nature. So as Ray touched on, the investment category was added, and that's where the investment committee is going to be posting and talking about proposals regarding capital pool investment strategies or anything related to their activities. So that'll be in the investment category. I am going to add a staking pools category later today, and there we'll have a high level category and then subcategories for each of the staking pools. And that will allow staking pool managers to have a thread where they can provide updates. They can connect with members if members have questions, whether it's from people who want to act as NXM stakers or people who are acting as NXM stakers who have delegated to a pool, or if it's people that would like to buy cover from a certain pool, or they want to know more about the products that pool's offering. This will be an area on the forum where people can interact and discuss with the different staking pool managers. Some of the new subcategories that have been added under a governance discussion, we've just narrowed things down for the protocol improvement proposal category, the DAO proposal category, and the DAO team funding categories. Now it's easy to identify which is which. You can see RFC next to things that haven't gone to a final proposal, so you can see the ones that are still in discussion. And then within the Nexus Mutual Updates category, I have tags for the Foundation, the DAO teams, for the tokenomics project, which Ray has been really great at providing updates and classifying things in there. Great updates from people who have received a grant and are providing updates about their progress, general questions, and then some of the archived newsletters when the newsletter used to be distributed on the forum. So if you have any input on the forum, you can put that in the feedback section on the forum, or you can comment right here in Discord. You can use the DAO forums channel to start a discussion and give me some feedback on the state of the forum. So hopefully everybody can have a review, and over time, I hope it's a lot easier to engage and have productive discussions with the other members right on the forum. And I'm also working with Under the Sea on the Discord notification spot project. So we're getting pretty close. We have essentially just a couple more things that we need to refine. And this is going to be a bot where people can ask for certain information right in Discord. If you want to know how much capacity is available for a certain cover product, you'll be able to use the / command to get that right in Discord. The same thing for getting a quote for a certain product. You can see what the capital pool holdings are. You can look at how many members are in the mutual. So there's various information, and then one of the ones that you'll be able to get as a DM by the bot is you can sign up for notifications if you've bought a cover and you want a reminder 2 weeks before your cover is going to expire. And then you can also request additional capacity if, let's say, 2 weeks before expiry, you see that there's no capacity available for that cover product, and you want to increase your cover buy when you renew your cover. So you can request that. There should be a better way for people to be able to communicate when they want to renew and if they need capacity. So hopefully these are beneficial longer term, but we should have an update on when this bot goes live sometime next week or the week after. So we'll have any updates on that in the newsletter, and of course updates on Discord that we can share with the community. So making good progress there, and as more updates become available, you can find those in the weekly newsletter as well. But I will hand things over to Hugh to give his weekly update from the foundation. Hugh?
Cool, thanks, Brave. Yeah, quite a few different things going on this week. One of the interesting ones you would have maybe seen if you're looking on chain is the Sherlock syndicate. So they've kind of released their own syndicate, and they are effectively using the Nexus mutual pool, or their own syndicate, but Nexus mutual for I think 37% of all of the risks written through Sherlock. So they've transitioned from us providing a simple access layer to them actually running their own syndicate, which I think is pretty powerful, and it gives them more flexibility and the ability to kind of easily add on new risks as they add on new risks, etc. So I think that's a pretty interesting, effectively, partnership with the Sherlock team that's hopefully going to grow quite well in the future, because they're from a kind of syndicate point of view or staking pool point of view, it's kind of like the perfect partner, because they both have pricing expertise, and they also have the distribution capability. So they've got their own customers that come to them for their kind of audit product, which they also provide coverage for on the back. So I think that's really interesting and powerful partnership that hopefully see grow more in the future. So I think there's going to be some more wider announcements on that, but something to check out. I guess more generally, what we've been doing kind of more on the sales side is definitely focused on slashing and staking coverage at the moment. Since withdrawals had been enabled on ETH, there's been quite a lot of interest from this. So we've got quite a few in the pipeline that always take a bit longer than you expect, but they're kind of more or less agreed and hopefully going to be coming online in the coming weeks and months. So there's a good solid direction there. We're getting a lot of inbound questions on the slashing coverage side. So that's kind of a lot of the focus of the kind of BD and sales efforts. On the kind of tech side, there's a few things kind of coming in the pipeline. There's three main things coming in the pipeline apart from tokenomics. So I'll get to tokenomics in a bit, but one of them is the multi-pool cover router. So when you get a quote from the system at the moment, the router gives you basically the cheapest staking pool, but for bigger covers, the cheapest option may actually be splitting up across multiple staking pools. So we're updating the router to enable that as well. So it gives you get a bit better price discovery for larger covers, essentially. So that's coming. Cover edits is also being worked on, and so we ideally wanted to ship that with the main V2 update, but we ran into a late bug that we were. I just wanted to make sure that we got things right rather than do a quick fix. So we're kind of working on that to make sure that it works okay, and some of the edge cases are dealt with. So that's also being picked up, and we're also planning to ship a smaller smart contract upgrade over the coming either later this week, maybe early next week. For just fixing a few small things to do with capacity management and stuff. So nothing material there, but a few items we picked up as a result of user testing and stuff. So those are kind of the three main things on the kind of short to midterm horizon for the on the kind of core protocol side, except for tokenomics, which I'll get into now. So we're spending a lot of time doing this, so I've kind of isolated as much as possible a few of the smart contract engineers to work on this one. At the moment, they're deep into kind of writing technical specs, but also looking at all of the different edge cases and making sure all those are kind of covered off. I know Ray's also going to be doing some more detailed simulations on some specific scenarios just to make sure that we cover off those edge cases or more kind of extreme scenarios, just to make sure the system still works in those situations. So there's a lot of discussions, building things up, getting the tech specs complete, and then I guess over the coming next couple of weeks, the aim is to get kind of like strawman code up so that we can, not Solidity code, but just kind of get code things up so we can build like full models of how it's going to work, and then we can move later into the Solidity. So once you've got the test versions working, so that's kind of the next steps there. I think, as we've mentioned before, but I'll just reiterate again because it doesn't hurt. Once we kind of get the tech specs into a decent spot, I think at that point it makes some sense to start the discussions on parameters and things like on that front. It also probably would benefit a lot from Ray's assistance in terms of running some simulations on various different parameter settings, which I know we've got some of already, but there's probably a few more we could provide, because I think that'll help inform the discussion as well. So basically, it's going to be relatively, there's different on the parameterization. It's going to be trade-offs one way or another, and trying to understand how sensitive the tokenomics model is to different parameter settings is going to be key to allowing members to make the decisions on where they want to set the values. So, and also there's going to be potentially a lot of values to set, but some are definitely much more important than others. And so understanding those ones and making sure we can focus the discussion in the right way, and we're making the key decisions together. So, lots of different things going on that side as well, but I think those are the main updates. I wanted to also give some personal views on the investment side, but I might just pause there if there are any questions beforehand. All right, well, yeah, just please drop questions in the please speak up after, or I'm dropping them in the community calls chat. I can pick them up from there if you have them. So I guess more broadly on personal perspective on some of the investment side of things, I think in general I'm quite, the things I'd probably like to see happen over the coming, call it 6 months or some rough time frame like that, is if we probably can allocate something to Rocket Pool ETH, so our ETH, look to allocate something to Stakewise ETH when they release their V3, so that's kind of a bit dependent on Stakewise and making sure that they get an Oracle up and a Chainlink Oracle and those types of things, and enough liquidity, but looking at doing that. And then potentially, I guess another option which has been raised by the Enzyme team is actually looking at them to be able to operate a direct staking option through the Enzyme Vault that we currently have as a potential third option. So that would mean like picking a staking operator directly. So it's not a liquid staking token. It would be allocating the ETH to like a Kiln or a Figment or someone like a Testant or someone like that who actually runs the validators, a validating operator, and have them stake the ETH directly on our behalf. Because now that withdrawals are enabled, there is obviously some liquidity, provided you wait the waiting period of whatever it is, roughly a month. So that if we were to do those 3 over the coming 6 months, say, then I think that gets us quite a long way in terms of allocation of the capital pool, and then kind of set aside some for new tokenomics as kind of exit liquidity, if you want to call it that, and then you also have to set aside a little bit for cash payments, claim payments, etc. Then I think that gets us to a reasonably good spot in terms of allocating the capital into being active and used efficiently, and also obviously the kind of day-to-day requirements of the mutual, etc. So that's kind of just roughly where I'm thinking. Obviously, I'll provide more detailed comments once I'm on the forum, once the conversations get a bit further advanced. But that's generally what I'm thinking on the investment side. So yeah, that's probably my update. Obviously, happy to take questions.
Thanks, Brave, and thanks you and Ray. Hi, everybody. Let's start by covering the latest sales within the last week. The mutual has sold about $7.2 million of cover. We earned about $13.4 thousand in fees. Our sales are continuing to gain momentum. For example, the last week's figure grew about 4 times since our last community call, which was on May 9th. I am excited to share that several protocols underwritten by Sherlock have recently been added to our list. Just as Hugh mentioned previously, Nexus Mutual has been partnering with Sherlock since 2022. In case you're not familiar with Sherlock, they're known for their innovative smart contract audits and the ability for teams to buy smart contract coverage for up to $5 million. Through our partnership with Sherlock, we help make DeFi safer for users while increasing cover sales and fees earned. In the last week, Sherlock launched their public staking pool, where they underwrite Sherlock excess cover. Every time Sherlock underwrites cover for a new protocol, they buy coverage for 37.5% of the total covered amount. Brave just shared a link to the Sherlock staking pool in the chat if you want to take a look. And Sherlock is one of the first staking pools to launch. They have established a strong distribution network and come with great risk expertise. As they scale and sell more cover, both our protocols will benefit and continue to make DeFi safer, one protocol at a time. We are thrilled to have risk management experts like Sherlock build on top of Nexus Mutual V2. Moving on, let's discuss active coverage by cover type. According to the recently launched covers dashboard, we have about $72 million of active total coverage. Protocol cover represents the largest share of total active cover, with about $58 million underwritten. And we have Sherlock underwritten quota share, about more than $5 million, which we had just presented in the previous slide, and Liquid Collective. In case you're not familiar, they're an institutional-focused liquid staking protocol, and they have been on our list since our last call. Now let's move on to our forum discussions. We encourage everyone to review and get involved in our RFCs or request for comments. As Brave mentioned, the Nexus Mutual Forum is currently undergoing a reorganization. We want to improve accessibility and clarity for all our members and welcome feedback from everybody during this process. So let us know if you have any ideas. Going over the active RFCs, one proposal is from the Avant-Garde Treasury team, and they're proposing members to redeploy funds from the Enzyme Vault to ETH staking solutions. The team will likely present a governance-ready proposal soon. Another proposal from UISC ETH is about allocating around 10% of the capital pool to stake with Rocket Pool. As Brave mentioned, there are also 2 RFCs about deprecating custody and yield token cover. Also, please find Ray's update on the tokenomics project and some further interesting updates from the investment committee for everyone who wants to start a discussion about a potential capital pool investment strategy. Please take a look at the investment committee overview and priorities, and check out all the other forums, and please share your thoughts with us. All resources right here are available in our community call channel. Now it's time for our open forum. Do you have any questions or topics you'd like to discuss? I want to thank everyone for joining us today. We encourage you to read The Hedge, our weekly newsletter, to stay updated on all things Nexus Mutual.